Okay, okay. Okay, let's start from where we left on Friday in the closing. So, did anyone caught this move? Like, did anyone caught this move up? We had the perfect validation criteria. Plus, I explained multiple times, not even once, multiple times, how to trade this, plus how long can you expect, plus how much points to risk, how to risk, and how much points can you expect from this. So if you did not trade it, so I don't know what else I can do for you, bro. So you can even check the coordinates and tally it from my previous stream. Okay, so from this point it never came back. We were dropping on Friday at close, and I took us like that was a scalp. Plus I bought it at the open, right at the market open. It was coming to this point, so I bought it, and I'm up about 200 points on the day. So that's good. This is something interesting. Wait, wait. I have to. If it comes above this point, this will be used as support. Wait a minute. Wait a minute. Okay. From 452, 452, 449, 452, 449. This is relevant for now. Let's 452, 449, 449, 449.9. This is a gauge. As for now, we have news in about how many minutes? We have news in about uh, 12:30. Oh, that was the news. And wait a minute. It's leaving these imbalances towards the downside. This is not very ideal case. But anyways, if it comes above this point and use this as support, then it's in a no short scenario again. So let's see. So I thought uh, forgot about the news totally. I was we had news on 12 o'clock, so that was the speech, Powell's speech, I guess. Let me just check. Wait a minute. Forex Factory. Uh, 9:30. Yep. Oh, so the price came back to this point. So, okay, I missed that news. I was expecting that we still have that uh, volatility for the news, but that's done. Okay, so that's much better because any move from this point would be a real move. So, 2403, 24, these are the areas which are imbalance. The price needs to balance these areas plus 40 points down. This area is also imbalance. This area is imbalance. This is an imbalance area, and this is an imbalance area. So let's see. I'm not touching it right now until it gives me something really good or moves above this point. The weekly previous. Let's remove this line. It's creating a lot of mess. This point 403. 403, it's much better for the price to leave imbalances towards the upside. That would give me a lot of confidence that we might move back up, filling these imbalances. So this imbalance from the downside is covered. That was imbalance. That's gone now. We only have an imbalance from this point and a lot of support from this point. This is all an area of interest. All of this is an area of interest. I would generally mark this zone. Generally mark this zone from the top of this point, from the top to the bottom of this on a higher time frame. Mark this border. Let's mark this as a temporary zone, but it's relevant for now. Ugh, remove the borders. Uh, area of interest. This is generally an area of interest. I want the price to leave an imbalance towards the upside, cover this imbalance, and then give me a confirmation, then move up. That would be really, really, really good. Uh, Ideally speaking, if the price do not cover, like, do not tag this imbalance for now, ideally speaking, and covers this imbalance, then move up. It's giving me a lot of confidence that it will move up. Ideally speaking, within the next 30 minutes, I want the price to move up above this point. Then I'm interested in longs. I can front run it if it gives me a validation on a 1 minute time frame. So, एक minute, let me just check if the price has tagged the imbalance on this point. So this has been tagged. I want the price ideally. Still, the trend on the 1 minute towards the downside is intact. Even on the 5 minutes, cut them. Yeah, even on the 5 minutes is intact. But ideally speaking, I want this to become a chop and move up. So that would be really good. and we can continue our trends towards the upside. Otherwise, I'm not interested. Okay, so this imbalance is tagged. If you can see this, there's an imbalance on 28 candle, 1328 candle on the 24 hours time frame. Yeah, 24 hours. Yeah, move up to cover this point. Give me a 36 seconds closing above this relative high would be the ideal. Otherwise, I'm not interested. So within the next 30 seconds, uh, first of all, you have to consider that this is the 31st candle. Okay, so 31st candle means the regular trading hours new candle open, new hourly candle open. I do not want the price to stay here for long. If the price stays here for long enough, then I'm not interested at all. Long enough for your reference, you can understand it from a point of view of 30 minutes. For the next 30 minutes, I do not want the price to stay below this level and move up. If not, then I'm not touching it. If it starts to move up above this point, giving me a validation, then I'm interested. I can even front run it. But still, 1 minute is intact towards the downside for now. This potentially can be a minor bottom. Potentially, if it gives me a validation, another minor bottom. So it needs to give me a validation, otherwise I'm not interested. It's okay. Normal, leaving an imbalance, overshooting. This is an overshoot, can be considered as an overshoot. Giving a direct close with the 1 minute still intact towards the downside. From the 5 minutes point of view, the 5 minutes will close in about 46 seconds. 40 41 40. The 15 minutes, this is not very ideal. It needs to cover this, it needs to tag this, then I'll be more interested. Imbalance is gone. Now we have two imbalances towards the upside. If it continues to move down, it's not start. So as it was, the price was here, I like knew okay, it's not going up without giving me a validation. So the 1 minute was still intact. It's not broken from the downside. Okay. Wait, wait. Let's move this up a little to the opening of that, the high of that candle. Wait a minute. The high. That became an overshoot, cleared out. 36, new 5 minutes candle. This is a direct close. So the 5 minutes, the 15 minutes, 8 minutes till the 15 minutes close. Price is the longer it stays here, the more chances of it becoming a no man's land. So it's in a no man's land now. Okay, so on the QQQs, we have gap potential, gap fill potential is more probable. I'm not interested, like for now, as long as the price stays intact on a 1 minute, this is more probable. We are at the 50% of the opening range gap. 50% gap fill is more likely because the 1 minute, the 15 minutes, and the 5 minutes are complementing each other towards the downside. So we have about 40 points essentially. So there is a new idea, trade idea. If anyone who has missed this move when the market opened, okay, if you have missed this move, you might get another chance. So really good. This move, this whole move. If anyone who was here on Friday remembers that these were the areas that I marked when I was about to leave, I said, okay, this is going to get tagged, this is going to get tagged, this is going to get tagged, the price is going to revisit these points at some point in future. These were exactly my words. And look what we have done right after touching that point. What was the risk on this trade? Like nothing, literally nothing. And if you talk about taking a validation criteria, even on a 1 minute, so what was the validation criteria? If you remember this, closing above the previous candle high. So like what was the risk? 3 points risk relative to what? At minimum, I said one can expect an 80 point to a 120 point move. So and we are in a probable no man's land. For me to be interested in longs, I need the price, like badly need the price to move above this point. Otherwise, not. Otherwise, it can become a choppy, ranging conditions which are not really favorable. I'm already up. I would have traded in these conditions. So, 40, Let's remove all of this. It would be really, really, really awesome that the price touches this point and give me an other entry for me to get long, or at least try another long. The 1 minute is still intact. 5 minutes. Hey, it's imbalance. You have 3 minutes till the 5 minutes closed, and it's imbalance towards the downside, and it's coming back down again. 5 minutes give me a direct closing below, so that would be 17 minutes till the hourly candle close. This can make a difference. This can really make a difference. So within the next 17 minutes, 15, 1 minute. Opening of the new 5 minutes candle, 1, 2, 3, 4. The last minute till the 5 minutes close. So, and there we go. Right on the dot. It's like, no, it's still imbalanced. Now it's balanced. 1 minute is still intact towards the downside. 5 minutes and 15 minutes. So, okay, okay. Three thirty to 15. You know what would be really, really, really amazing if the price starts to go down like with speed and moves a little more further than these points, below these points. If it gets to these points, then I'll show you something really, really amazing. That would be, if it works out, that would be a trade of a lifetime. That would be a trade basically if held for about a week or 4 days, 4 days to a week can yield about 300 to 400 points with relatively low risk and high probability. Mm. 1 minute trend break on a 1 minute. 5 minutes. 5 minute valid. I think the text is too big. 5 MV is much better. MV. Overall, I think it's a no man's land. The overall range would be this 74 points, but we can still look for setups in that range until it gives me something really good or moves above a certain level. Yes. 15 minutes validation would be really nice. Even in a no man's land, I can still think about front running it, but I need a 15 minutes validation at least. 15 MV for reference. Let's mark it. Screen for reference. See how the 5 minutes is not giving a closing above 9 seconds left. Now, what would be the dealing range? This whole area is the dealing range. Even if the price moves to this point, that would still not be considered a valid area with respect to the 5 minutes. So we got this candle balanced. Call like move all the way up here. This Hmm. Wait a minute. Mm. This is the new hourly candle, and we have given a closing below the previous candle low. We probably have filled the opening range gap. Ah, middle line. Fifteen minutes. From the perspective of the 4 hours, got a closing below the previous low. That's the first point. Plus, this whole area is the dealing range with respect of the 4 hours. Now, the 4 hours, the hourly 5 minutes, 15 minutes are in conjunction or parallel to each other. Mm. This is the opening of the new hourly candle. This is the opening of this is the low, this is the high. You can expect some sort of a minor trend break with respect to on a 1 minute, but I want the price if it continues or regain this territory, then I'm like interested. But for now, I'm not interested in the price range overall. The 5 minutes got a break on the 5 minutes. Let's see if it's able to help because this is still relatively close to the previous high. if it makes an effort to close above this 15 minutes high, this specific 15 minutes high on 1330 candle high, then I'm interested. Until then, we can get a lot of fake outs like this. As the price is touching now, the filling of the opening range gap is more probable, as I was saying from the start of the stream. So, but from the start, I knew okay, this is more probable. The 1 minute was intact towards the downside, right? But I was not interested in going short overall. I can see it moving down, but no. Okay, if the price comes here, these lines represents the NVOC or the new week opening gap, right? So this is where the week started. Today, this is where we open. If we move below this point, we have a mm, area of interest below these levels. Okay, we have an area of interest below, sir, like somewhere around here. Okay, if the price comes to this point, because the 4 hours is more leaning towards the downside and the hourly is leaning towards the downside, 15 minutes is also. So all of these candles are leaning towards the downside, right? If it reaches to that point, then I'll take a trade, another swing trade, which can potentially give another 300 or 400 points. That would be a more of a position trade from my point of view. So as for now, it's in a no man's land, so I'm not interested. This is imbalanced. 14.6 candle is imbalanced from the okay. 5 minutes is leaning it's trying to put an effort to break the minor trend towards the downside. So as it's in a no man's land, it can break a minor trend towards the upside, then move towards the downside. So this is what a chop or a no man's land is. We can look at it from a 1 minute's point of view. Either a chop, 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 chop. This is going to be revisited. This price point 14.6 at some point. 6 14 seconds till the 1 minute closes. Now the 1 minute and the 5 minutes are more bullish than bearish on a minor scale. But keep this in mind, it can be a chop because this is a no man's land, so I really don't trust the 1 minute nor the 5 minutes. See, I'll make it very clear what I'm trying to do here, okay? If the price puts an effort and moves above this level, puts like regain this territory somehow, then I'm interested in longs. Until then, I'll be either there are two cases. The first case is which is very obvious that the price will as it's moving towards the downside, the 15 minutes, 4 hours, and the 1 hour is bearish for now. So completing the whole opening range gap, completing the whole that's the primary case. Okay. Meanwhile, if the price somehow finds support between the 50%, like it's chopping right now, and on a minor trend, 5 minutes or it starts to move up, because it's not a perfect world, I'll not like demand the price to go and complete the whole range gap, then move up. So I'm just looking how the price reacts. If it finds support here and moves up, that's okay. If it completely moves down, that's already what's happening. Okay. Mm. 13. We have 2 minutes till the 15 minutes close. Approximately 2 minutes. Yeah, 1.5 minutes. Last minute till the 15 minutes close. Touch the on and walk. Invalid. 8 seconds. New 15 minutes. And last 15 minutes of the hourly candle on RTH, regular trading hours. If the price comes here to this blue line, then I'll watch how the price reacts to this point. This is also an area of interest. This is aligned with the NVOG. Dollar index. Okay, so the dollar index, uh, who wanna know what's about the dollar index? If anyone's interested. DXY, DXY, DXY. So the DXY 04050 04. Okay, basically use this as a gauge on the DXY 104 105 55 104. Okay, generally speaking, okay, for me to be interested in, and this is the DXY is generally a gauge of the market, so I do not trade the Euro USD nor the dollar. I use it as a general confluence. Okay, so as long as the price will stay below this point or the monthly fair value gap, 50% of the fair value gap below this point, I'm not interested in. I cannot think of dollar longs. I do not trade it, but I use it as a general market gauge. So even if we are falling on the Qs or the Nasdaq, I would still be skeptical of this downfall. So, okay. So I would go long at some point here. That would be a good, really good position trade. You'll see, and I'll mention when I'm about to go long. So, EXY. Mm, Okay. For Bitcoin, BTC, BTC 61, BTC, BTC, USD, Bitcoin, 4 hours. Okay, Bitcoin is trying to put an effort toward, obviously, it's very obvious that it's trying to make an effort towards the downside. So, what can be the BTC bottom, potential bottom? Uh, this whole area is can be a potential. This is not a trade idea. I won't get into more precision with BTC. Okay, from okay, let me share the coordinates just like on my watch list. Okay. 56, 56, 950, 56, 950, 56, 950, 50, 18, 8, 8, 18, 50, 8, 18. Okay. No, it's huge. This was generally area of interest. I was watching this price. So this can be the longest term bottom, right? Okay. But for me to be interested in longs, the price needs to stay above these levels. Price needs to stay above one. What would be 61,099, 60,038. It's immature. It's not mature. So it needs to stay above this price for another 2 or 3 days. Okay, so 2 or 3 days, if the price moves or stay above this point for 2 or 3 more days, okay, at this point it's 50-50. But I want the price to at least give me another 2 or 3 more days closing above this point. Then I'll be looking not to go short. Okay, I'm not gonna say or not gonna say tell you to buy or sell. Just my me personally will not short the BTC. So this area will be used in future as a reference point. So so like probably this will be revisited at some point in future. Probably if we come back below this point, then this can create a mess. This is a big problem. I want another 2 or 3 days closing above this level, then I'll be interested in longs. So this is BTC. Not bad. But keep this in mind, all of these candles are imbalanced. We will be revisited. So if you want to get chopped, go ahead and do something about this, but I'm not interested in longs as per now. If you get a closing above this level on a 15, this is a 15 minutes time frame. Okay, this is a 15 minutes time frame. If we get a closing above, then wick down, clearing out of all of this imbalances on the 1 minute, then move up, then it's obviously much more better. Because we cannot move very far away from these points, leaving these imbalances. Now 15 minutes. We have 2 minutes till the 15 minutes close. This would be the first 15 minutes after 11:15. So give us a 15 minutes closing above, then make chop, 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 clear out all of the imbalances, then do something or like regain this territory. Then I'm very much interested in longs again. But as for now, it's in a no man's land, and I cannot hope that it will break it, leaving these imbalances. The best it can do for now is to reach up to this point. It's a complete mess. As we started the stream, I said, okay, I do not want the price to stay below this level for another 30 minutes, and it did. So now it's leaving all of these imbalances. Basically, it's in a now no man's land. It's really not really ideal case. Over 96.36. 6, 6.96. 'Use this as support. But Uh, the price can use this as a good support. But you know what I really hate about this shit? This is what I want, basically, right? But it's leaving all of these imbalances. So there's a contradiction. So it's not the ideal for me. This is what I wanted the price to do, basically, right? So give me a closing uh, above this point. Basically, it's in a no man's land. I wanted to front run it for it to like break the no man's land, right? But it's doing it in a very ugly manner. How many minutes till the 15 minutes close? It's it's giving me all the green signals, but it's leaving all of these inefficient species below. It will use all of these things that I'm referring to. Okay, but still, this is really ugly. You have to keep this in mind. I have to let this price go because I'm already up about 200 points. This, all of this is imbalanced. I do not like this. Okay. The best case would be for the price to stay here. Ideal case would be for the price to stay here or clear out those liquidity, then move up. If it starts to move up, it's very much possible. I'm already telling you it's very much possible. I was not interested in shorts, but I'm not going to trade this. Okay. You see where it's stopping. Okay. No, 5 minutes. The price can very much use this as a floor to move up, but it's not the ideal. And this is the worst part, okay? When it gives me the things I want while leaving all of these inefficiencies, more often than not, it turns out very good thing because it comes back, leaving all of these inefficiencies, so it comes back. I will not chase it, even though I know, okay, it's giving all the green signals. Got a good clear indication on 15 minutes. See, got validated on a 5 minutes. Got validated, right? Uh, but I'm not gonna take it. Not gonna take it. Not gonna chase it. Not gonna take it. I'll just. Why I'm not gonna take it? Because if I take it, I know more often than not it comes back to these levels. Okay. So why would I take something that I know has more risk, right? 15 minutes. See this point. Even on a 5 minutes, this is imbalanced. So, no, no. See this? It's never like this too easy, never too obvious that it's moving up, right? So the market usually gives this sort of a breakout. Yeah, if you are trading on a very, very, very high leverage, you can like take the breakout, like getting out on 10 points, but I'm not doing that specific thing right now. Okay. In the 5 minutes. You know what I will really believe that it sharply moves down, take out this low, then it starts to move back up, then I'll be all in. Then I'll trust that. Majority will not. That it from this point it needs to give me a confirmation. Otherwise, I'll not. Obviously not. That was a clean breakout. Uh, you saw that I was having a feeling of FOMO, but I exactly told that I'm not gonna take it. So I'll assume that the participants of the market will also have that tendency to feel that FOMO. So if somebody had bought it here, I think the market is coming back. Uh, level 40. No. Okay. It can be used as a support, but I do not want the market to use it as support. Like this is what I want, right? And leave this inefficiency for me to be interested in like longs. It gives me more confidence that the price will revisit at this some point in future. If it directly gives like moves up, then it's not good. Like tag all of these inefficiencies, leave the inefficiencies towards the upside, then it's I'll believe when the market will move up because I can front run it. I'll understand. I'll explain. Okay, I'll front run it from these points on a good confirmation on a minor trend, expecting that at least the market will fill out those inefficiencies, right? Which is like like it did here. Okay, like it did at this point. So it would give me more confidence that the market will at least move up to back to this point, right? So I can front run it. So as the price will move up towards that point, I will like I would be in the trade already, right? Running it. Then I can put my stop loss at break even, expecting that the market will use this area of interest as support or anything. Then that's a risk-free rate of return. Okay, good. Now this is cleared out. I want this, and that to clear out. Clear out. That would be ideal case, and it would be much more believable. Oh, oh no. And I can expect at close, at the market close, we can expect some volatility, as I'm expecting of some volatility that can be towards the upside. A case can be made like that. Hey, who is watching this video? I'm just talking to myself, answering my own questions. Can you comment? I wanna know who is watching this stream. So the 1 minute is intact again towards the downside. The minor trend is intact. Uh, on the 5 minutes. Uh, okay, so the 5 minutes, if it closes relative to that, then we have accessibility till this point. Then if the new candle opens, move straight up. In a perfect world, right? Oh, tails. Like, good man. You are regular. You understand the thought process. Okay, I'm just sharing my internal dialogue because there's nobody in the chat. Okay, so now we have on the 5 minutes, it's more accessible. The price can, like, obviously, it's not a perfect world, right? But the price has the accessibility to not break the trend and like tag this and move up. Like, that would be a really perfect world. Not saying that's going to happen, but just trying to explain a thought process or the validation or invalidation criteria. Okay, on the 15 minutes, we really have an accessibility. The price can, we have 13 minutes till this candle close. Okay, we have a lot of time. Plus, we have validated the 15 minutes, 15 minutes valid, 15 minutes valid, 15 minutes. 15 minutes valid. I'm representing this as 15 MV, okay, and the 15 minutes invalid would be 15 IMV. So IM. 15 minutes valid. So this is being used as a reference point, as this is being used as the reference point, and the price is moving up. Oh no. Victor, brother, how are you? From Mexico. Nice. Okay. So this is okay. The 1 minute is trying to make an effort to move towards the upside. I hope, okay, at this point, I hope you are following along the logic, okay, and you understand that what I want. Obviously, it's not a perfect, but it's not gonna give me. But what I want is to clear out all of these imbalances, then move up. And if it starts to move up from this point, I'm not interested, as you know. Okay, 47, 5 minutes. Okay, it can chop around, chop around, chop around, then challenge all of these buyers who have bought it, challenge their position, then move up. Probably. Or it can just directly move up. But that's not the ideal case. On the cues, you see this point, right? These areas can be used as support. The market can definitely use them as support, but I do not want them to be used as support as for now, because we have a lot of inefficiencies, which tells me that the market is going to refer back to these points at some point in future. So that would be not be the ideal case for me to enter. Okay. It left an inefficiency, and I thought, okay, that would the best case will happen, and we will take out all of this liquidity from the downside. Then we'll start to move back up, and then I'll front run it. First target would have been that, and hoping to challenge the no man's land overall. But you know, Hills, I do not look at the fair value gaps at all. I used to look at them, but now I don't, and it's like it does not affect my trading. So I think of the market as like, if you divide the market in two ways, just the candle itself and the wicks, right? So statistically speaking, you want the close above the high. What's the high? The wick is the high. Okay. If you see this point, so the market moved so fast towards the downside that it never wicked up. So that is, from my point of view, it's an imbalance. Okay. Okay. No way. Okay, if it leaves this imbalance and that imbalance, it gives me, oh ho 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 ho. That's really perfect. If it leaves that imbalance, okay. So it usually gives me a lot of confidence. It's, you know that it's an imbalance, but you don't know how to use that, right? So you can understand that from a statement that the price is going to refer back to that point at some point in future, okay? The higher the time frame, the higher the time frame imbalance, the more likely it's going to refer back to it. Even if there is very rare occurrence on a 4 hours that you see a wickless candle tails, okay. So if something is really rare, okay, the market definitely gets referred back. Okay, for example, this was the wickless candle on a 4 hour. This is a 4 hour chart I'm referring to. This specific on Wednesday, 10th July. So this was wickless. Okay, so the market referred back to this point. Okay, it does not mean that it's going to like come back directly at this point. Okay, so you how many candles do you see statistically speaking that are wickless on a higher time frame? There are 95% to 96% candles. It's very obvious. This is not a theory. You can just look at it and see that it's a rare occurrence. So if it's weekly, for example, you see this point, there's a candle, okay. Even if there's a dot of a wick, that's considered valid, right? So how many candles do you see which are wickless? If you zoom in, everything is balanced. Okay, so this was the point. You see this? Even a little bit it wicked. So the lower the time frame you go, the more the imbalances, because obviously on a second chart it cannot spike towards the both sides at the same time, right? So it moves towards the one side first, then the other side. So that's how the market is built, right? And now this was a perfect example. Okay. Sometimes it refers back to it immediately and balance it out within a certain time. See, this was imbalance, it got balanced. So you don't target them. So this was imbalance, it got balanced. Okay. So you do not target them immediately, because if you start to target them immediately, what you're gonna do is you're gonna try to short it, hoping that it's gonna like immediately come down and take this out. No, the statement I'm using is like it came up through a lot of trial and error. The thing, the tools you are using or the statements you use along with the tools determines your behavior. For example, I don't know how you use a fair value gap, but there are ways to using a fair value gap. Okay, if 2 or 3% are using a fair value gap, everyone would be using it differently. Okay, somebody would be using it as a closing price, is keeping a track record of your closing prices. Somebody would buy it at the fair value gap. So, and both outcomes would be completely different, right? So, what am I using as an imbalance is as the wickless candle. I refer like I think of them as to that point at some point in future. So, what I'm gonna do is mark all of these areas. Okay, so marking all of these zones or the areas. Now I'm using my own strategy. This part comes at the end, like the last 5% of my confidence. Even if there are no imbalances, I'll still take the trade, right? But if this is like something like this is obvious, right? The price, you could think of that the price is not allowed to go until it clears or revisit these areas, because it hasn't moved. It moved so fast around this area. Okay, there might be a data feed problem. Okay, but you might see them on futures chart or like some other chart, but I am not seeing them. Means that it was fast enough to be imbalanced. The price never give me a wick down, a wick down, a wick down. So it's going to refer back to them at some point in future. So what's gonna happen? First of all, I have my bias, right? Uh, I want, generally speaking, I want the price to move up. See, so you saw that as the price was moving up, I explained everything about why am I not going to enter this and what are the requirements for me to be interested in longs, because I saw this, all of this was imbalance. See, so if I would have gotten in the FOMO and bought it around here, hoping that the price would not come back below these points, that would be really stupid, right? I literally explained my exact thought process. Okay, I was waiting for it for about an hour. Now it has gone up. It's giving me all of the green signals. It's a good breakout and it's giving me all the validation, but I'm not going to enter it. And you saw how the price is reacting to those points. So overall, this is how I use them. It's not a standalone strategy. For example, if I'm leaning towards the upside, okay, and the price has a lot of imbalances towards the upside, okay, so I would buy it at my areas of interest, and because I have all of these imbalances towards the upside, it gives me much more confidence in terms of lot size, basically. Okay, so the higher the time frame, higher means the 5 minutes or the 15 minutes. You will rarely see a, okay, let me show you. Okay, so this was how many candles do you see which are imbalanced sales on a 5 minutes? This is a 5 minute chart. So this was imbalance. So the price referred, like, no, that was even not even imbalance. Okay, and this was I was talking about. This was imbalanced. You see this? I hope you see this. This was imbalanced. How the price referred back to this point. So I hope you get the point. The higher the time frame, the lower the chances of it being an imbalance. There's an imbalance. Okay. You see this? Sometimes the 5 minutes is aligned with the 15 minutes because both are the same things, right? And if it happens on a 4 o'clock, like this candle opened on a 4 o'clock, like move straight up, so it would have been appeared on a hourly candle also. Sometimes it appears on the hourly candle, but the market straighten itself out. As this was the example, I guess this was the example, the market referred back to this point and came back up again. So this is a basic logic which I use layered upon layered upon layered of logic. But this is what comes at the end, not the standalone strategy. Okay, so we don't live in a perfect world and we are in a no man's land. What would have been the ideal case? Okay, within the next 7 seconds, the next 15 minutes is about to close. This is the new 15 minutes and it's in imbalance. Now it's balanced. Wow. Sadvaiti. And that's not a bad idea, Sadvaiti. Okay, so Thales, do not look for these imbalances on the QQQs because everything on the QQQs is imbalanced. So look for it on this chart. Capital.com US100 gives a more clear idea. So now you saw this, okay? I Okay, whenever the price will leave this imbalance, I'll say, okay, it's going to refer back to this point at some point in future. I don't know when. I'll exactly tell you, I don't know when it's going to refer back. But for me to be like, make it the ideal case, if it balances these out, then it starts to move back up. So it's moving along with my personal bias. See, so it's moving along with my personal bias. which and I hope and I know it's going to clear those liquidity or the balances, those imbalances out along the way. So it gives me more confidence. Now everything towards the upside is balanced. So how can I say? Now we have imbalances from the downside. Okay, wait a minute. Wait a minute. Basically, we are still in a no man's land. Hmm. See how I said the price will use this, can use this as a support, and I want them to use this. They want the price to use this as support, but first I needed to clear that out for me to be interested in longs. But it can still use that as support. The AOI refers to an area of interest. All of this area is an area of interest. The price can use this as an area of interest. But I first want the price to clear out that liquidity. I'm being stubborn, but I gotta do what I gotta do. Even if it use this as support, I'm not interested in long. It can move up, I know for sure. The 15 minutes is more leaning towards the upside still. 5 minutes is towards the upside. See this, all of these areas. The 15 minutes, okay, can be used as a breakout. I'm not interested. Just putting it out there. From the start of the stream, I was more interested in longs. My general criteria is everything the market is giving me is all of this for what I wanted, but it left some, you know, garbage here, which indicates that the price will refer back to this point at some point in future. So my basic plan is this area of interest. If I take a trade from this point, I want at least another about another what I expect from this area to give me another 100 points at least. So how can the price move up, leaving an inefficiency? Give me 100 points, right? Everyone here understands the logic which I'm following, right? Even if, see, there is no shortage of trades for me. Like at this point, right? So I'm just being selective of my trades. I took this trade, I mentioned, and I told everyone about those the box I mentioned on the Friday. You can, as I was leaving, this was the box from this point. I removed it, but from this point to that point, the box was here. I explained how to trade that box, and I explained what the risk to reward would be, at least 80 to 120 points. It gave me around that point. I'm already up, so I'm good for the day. Now I'm being just being selective. It can give me another 100 points, but I need my criteria to be met first. How many minutes till the 15 minutes close? We have 2 minutes till the 15 minutes close. It's doing all the right things, but you know, you see all of these points, this point, that point, that point. These are inefficiencies on a 5 minute chart or imbalances on a 5 minute chart from Thursday. This point, some are on 5 minutes, some are on 1 minute. So that would be a general target, but first it needs to, because from my point of view and what I have backtested, the market is generally not allowed to move like further higher until it clears those things out. So how can I take a trade and expect about 100 points when I know that there is a handicap? But there is a lot of chance that it can still do that. So no shorts, generally speaking. On a 1 minute, it's the trend is intact. As you know, 1 minute is making an effort to move up, up, and up. 5 minutes, we have about 20 seconds till the 15 minutes close. 12 seconds. The new 5 minutes. We have 45 minutes till the market closes. Let's just assume that there is no, as for now, because the 1 minute is still intact. So as far as the 1 minute, the 5 minute, and the 15 minutes is concerned, if we clear our mind from the point of view of that, we are taking good support from that level, this level. This can be used as a floor, as this was used as a floor. Sometimes it's really hard to let trades go. I tell you, bro. Okay. On the cues, use that as support. This can be used as a floor, okay, the 1 minute is still intact, 5 minute and the 15 minutes still intact towards the upside. You know what would be really, really, really amazing? I know it's going up, it's doing everything I wanted it to do, but I want this to get cleared out, then use it as support, then I'll use a full lot. If even if I use, I can still um ignore this, okay, and take some 30 or 20 points out of this, but that's not what I want. There's no shortage of trades for me. Basically, FOMO comes from having like low frequency of trades is equal to FOMO. The higher the trades frequency, the lower the FOMO. 1 minute is still intact. How many minutes till the 5 minutes close? About half a minute till the 5 minutes close. Okay. From the point of view of an hourly time frame, okay, we have 40 minutes. Yeah. You see this point, there's a contradiction. 4 hours. I don't put much weight onto these specific contradictions, but just keep this in mind. In the 4 hours, that is the close we got. Still, see how we use that as a floor. It was a clean out breakout. Okay. If we move below this, if we move below this, then I can be much more confident. Then we that we are not moving up that fast. There was a direct close on the 1 minute. 1 minute minor trend has shifted. 5 minutes. Give me a closing below this point would be the ideal case. Do not think that I'm saying the ideal case that I'm trying to short this. I want the price to clear all of that liquidity out, right? Even if the price do not moves up in the normal market like before the close, I can still expect the market to, if it regains this territory even in the after hours, even when I'm not streaming, I'll go long. So at this point, I've explained this logical million times. So 5 minutes invalid, 5 MIV, red. Ideally speaking, if the price wants to move lower, it can use that this box, not use this as support and use this as resistance and move down. $23. Got re-intact again from 322. 40 seconds till the 5 minutes close. One minute is intact. 5 minutes, the 1 minute, everything is aligned. If we move below this red bar, like giving a validation low, then gives more confidence, then we potentially can clear out that part. It's too good. But we are not showing any signs of weakness as for now. 1 minute is still intact. You see this point. Give a closing, directly closing below, directly closing above. What does this indicate? It's an early indication of a range on a smaller time frame. So we usually move a little further in the time frame. That would be the 5 minutes, right? So we have around 1.5 minutes till the 5 minutes close. That's not bad. Come on. Last minute till the 5 minutes close. And the 15 minutes close. Good. Hope we get a surprise bar. Hope in this point. Okay. 15. We are below that red box. That's not bad. 5 minutes and the 15 minutes. Both have the same invalidation criteria. Move back to the 1 minute. That was indicating a chop, not getting a closing below that line. Last 30 minutes, surprise bar, either a surprise bar or chop. It's above this price in the 5 minutes. Yeah, it's continuing towards the upside. 5 minutes is still intact. Now the 1 minute is also in line with that. If it gives me, yeah, that would be really awesome. Okay. This is what's bothering me really. You see how this box is holding price, and that's generally a no man land is okay. So I want the price to go below this point and not use this as support. Obviously, it's not a perfect world, but the worst thing that will happen to me, okay, that it moves up. Okay, it doesn't mean I don't want it to move up. It means that I'll not be in the trade, and I know it's gonna move up somehow. So until it fills my criteria, I'm not going to do anything. It's better for the market and for me to stay in the shop, generate liquidity, and move below this box, not use this as support or that as support, this as support, right? That would be really good. Surprise bar, give me a surprise bar to the downside, bro. Okay. It came all the way back, like it cleared that out, but for some fucking reason it left this, left this point, left this, and we'll just consider both of them like this and that. So as a whole, not choose this as support, buddy. Don't choose this as support. On a 5 minutes, okay. So you can also use whatever on a the fair value gap is also an imbalance, generally speaking, right? So the fair value gap would be the middle of that candle, and I'm using the low and the high of that candle, the most extremes. Okay, The fair value is the body, and the body which has been not been retested or revisited for some period of time. And the wicks would be an extreme of that candle. Candle has two components, the body and the wick, the high and the low, right? High, low, open, close makes the body and the wick. Not use this as support. Good. Clear this out, and that out. And when no one really expects you to, then move up in the after hours. So for today, it's totally narrative based. Even if I leave the stream and the market closes, it comes back down. So you have to take in account of two things off stream. Okay, if you are with me from the start of the stream, you understand what I'm talking about. First, you take note of this price point, this price point. If it comes to this point, just uh, observe how the price reacts to this point. I don't know what to say more than that. Okay. And if it clears this liquidity out and starts to move back up, take in account of these coordinates, use them as floor. Get it? The new 5 minutes candle, 5 minutes candle give a surprise bar. The 15 minutes and the 5 minutes give me another 5 minutes closing below that line. Oh, that would be really perfect because the 5 minutes and the 15 minutes have the same invalidation criteria. Okay, come down. E2. Give me 2.5 minutes more. Good. Good. Leave an inefficiency. Leave this, bro. Leave it. Leave it. 44. Last minute till the 15 minutes close. God, no. Yeah. Then we have market on close. There we go. First one has been tagged. Nice. You see what I was really worried about. Hills. You get it? Get it now? Second one has been tagged. Don't leave them to. Now this is left and everything has been cleared out except this one from the upside. Don't clear it out now. Clear this out, then clear this out. Yeah. Yup. 45. This is the last 15 minutes till the market close. Till the market close. Now the 15 minutes, 5 minutes, and the 1 minutes are in conjunction along with the hourly candle. Hourly. You see how we closed. We were trying to move back up. I was not interested in longs. You see how it saves me from a lot of bad trades. A lot of bad trades. How we respected this area at the red zone. So clears them out. Come on. Come on. Yep. Yep. Go ahead. There we go. There we go. Okay. Now we have about 3 minutes. 3 minutes till what? Till the market on close. If now it starts to move back up and target this point, then it's really good. Otherwise, fun is still intact. It needs to give me a good validation. Now I'll totally believe it's if it starts to move back up. But not this point. Obviously, I need it to move back up to this point, or give me a 5 minutes or 15 minutes validation. Okay. For front running. Front running. Fuck. Now the risk is really low. Hey, Tails, don't tell it to anyone about this witchcraft, bro. Uh, not now. Not now. Hold it. Hold it. Hold it. Needs to give me a closing, good closing. We're about to mark it. On close, I need some floor. I need some floor. I need a floor, bro. Give me a floor. Give me a floor. It left an inefficiency. Again, towards the upside, market on close started. Okay. Market on close. Left an inefficiency towards the downside. 2330. Keep this in mind. 2330. Took a shot after it closed under that red line. Oh, nice. Nice, bro. You took a shot. Nice. Okay, I'll see how the price reacts to this point specifically. But ATR is fucking expanded. Uh, not giving me a validation. This motherfucker. Come on. No validation. No validation. And down we go. Still, how many points lower than that? 17 points. Bro, wait till you will be able to get a long and a short. You're paying attention. That's really good. La, 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 la. Okay, I think the market is coming down. If it starts to go down, that's really good from a perspective of a position trade, because I was waiting for position trades while taking 100, 200 points trade. That's really not uh, that of a standard trade for me. Um, there are some trades which are like once in a lifetime trades. So if it comes to that point, I'll tell you exactly what that is. But for that to happen, as I was mentioning it in from the start of the stream, It needs to come down below somewhere around here. Okay. Hey, keep this in mind, bro. This can be overshoot. This is 5 minute chart. This is imbalanced. We have a lot of inefficiencies towards the upside. 53. Yep. My guy, 11 seconds. You're touching the 339, 339, 33. Wow. Good long can be. Hey, do not take this as an financial advice, but can 339, 2339 go up, 2339 go up. If you witness this, you'll not forget me. जलवा दिखावे हैं जो 340, 340. Use this as floor, bro. I'm just 340. Don't leave an inefficiency, motherfucker. Don't leave an inefficiency. Yeah. Oh my God. 340. Shit. I don't know if you understand what I'm doing or not, but bro, bro, I'll explain. Wait. If you read in between the lines, that would be really good. 5 minutes till the market close. Don't leave an inefficiency. Just move back up. If it starts to move back up again, ah, falling. Spike down. I'll add. Oh God. 56. I'm all lost. Hyped up. 56. Fuck. 328. Fuck it, bro. 56, 50. 358.1. It's a left an inefficiency, but still, it's okay. Can Still the 1 minute is intact. 3 minutes till the market close. Just clear the liquidity out. I'll be happy. Clear that liquidity out, my G. Uh-oh. Let's clear it out. 3 minutes till the market close. But still, anyways, it's fucking Tuesday. No matter. Doesn't really matter. Oh, It can hold the 1 minute, but still clear that liquidity out. Let's go. Uh, this can hold the trend. This is can be a problem. I need a floor, baby. 2 minutes till the market close. 340 is the floor, generally speaking. No financial advice, as always. Why the fuck are you leaving some farts? God, nah. Uh, Last minute, 340. Wait a minute, wait a minute. Brother, ew. Let's go. What's that, brother? What's that? Are you still here with me? Oh, God. Oh, it cleared that liquidity out. Use this as support, baby. If it use this as support, come on, come on, come on, come on. Use this as support. And the market is closed. I'm all hyped up. Narrative is still valid. It can still wait, wait, wait. The show isn't over. Wait, wait, Tails, you'll see. If it works out, you'll see. Use this as support, motherfucker. It's 4-1. The market is closed. Low volatility. Uh, you know what? 340 is generally a floor. So the market is allowed now. Rise, market. Rise, Nasdaq. Rise. I know it's a little too much to expect the market to be more volatile after it closes, but still. I am eternally optimistic, you know. Nah, it's not gonna do. Anyways, if it moves up on a slow volatility, it'll still ride the partials. So now you have witnessed something like something really amazing. Okay. Now, as the market has cleared all of that shit out, it's allowed now. Like it's allowed to go up. It's really good that you took a short, I took a long. Both were profitable. Good crazy. Okay. Ah, anyways, I don't think it's going to move now. It can chop around, but hey, use can use this as support. Take this coordinates into consideration. Just take a screenshot or whatever. And this is a floor. Do whatever with it. Okay, brother. And so I'm up about 250 points on the day. The earlier trade from this point about got on like around here, r- got out around here, and took a scalp from this point onwards. Thank you so much. Hope you learned something, Tails. You're the only one who is paying attention to this is not something normal. And now I think you understand. Okay, okay, okay. See ya.